Guess what? India does have foundational AI
That's right.
now, today. Having built our own, it's worked brilliantly, and we are incredibly proud of it.
When you're sitting in the CEO's seat, there's very few people that you can talk to.
For the average retail investor in India, betting in stock market is not much different from playing a game of poker. While there is enough and more information available for them on which stocks to buy, when to buy, there isn't much available when it comes to selling a stock. Today, we go behind the scenes with a Mumbai based startup, InvestorAI, that has been building its foundational AI model for wealth management since 2018. They have brought hedge fund grade AI led tools for the retail investors in India. Also making a guest appearance is Hodor, who you will find strolling around the set and just basically chilling in life. So, welcome both of you guys to this podcast. I feel like we are right now in a very multicultural conference because it feels like an Indo-UK meet also. We sent one brilliant guy to UK and we got another one. So I want to start with you. So you visited India in 1991. From 91 to 2025, what are the changes in India that would have attracted you to come here and like set up a company?
Honestly, 91 to early 2000s, I was kind of too young to know any different. I think when I came back here, probably 2006, after Akshaya and I met, I kind of came back, and at that time, and it was in Bangalore mainly, there was a real energy. India was in that kind of boom phase post Y2K, and you were coming from a European or a North American context where if you get growth of a few percent, everyone feels quite happy. And in a kind of India, there was a real sense of belief that we can take this and we can go somewhere different with it and we can really grow it. And I always came back really, really energized. And my staff would see it, my family could see it, everyone could see it. So the kind of energy was here. It's then how do you kind of capture more of that and be part of that and do something different?
All right. And you traded that energy for UK. What about UK attracted you?
You're talking about early 90s,
Yeah.
So I moved to UK in 93. And at the time, opportunities in India were not as great as they are today. And I was working for an international bank, Citibank, and I got an opportunity to work overseas and I took it. I enjoy my time in UK. I've been there for many years, but I have been back and forth with India a lot. And I want to stay connected with India because what is happening in India, I think it's a once in a generation change that is taking place.
Actually, I want to go over a little bit of your background because your journey and your career is really phenomenal. You started ITS company Progeon, which is now known as Infosys BPO. But I think that was just the beginning of your entrepreneurial instinct kicking in. So, tell me from that point onwards, has it been precision planning? Has it been going with the flow? What is the thought there?
You have to realize that I joined Progeon as its first CEO after 22 years of work experience at Citi. I think it takes a while for you to get to know yourself as a professional, what you really like. And if I now look back to 45 years of work experience, what are the moments I have been the happiest? And there have been times when I've been building something. Progeon was, I remember I showed up there and, Nandan and Murthy told me that that's the building, but there's nobody there, fill it up. There's $30 million in the bank and don't ask for more. I didn't say that, but that's the feeling. And
It's okay, you won't remember.
do your thing. And, and we grew that business and it was a great time.
Yeah.
And we built a very good business, which we are still proud of. And I think I began to realize that I like building things. Now, but sometimes you build things in a large organization, sometimes you build things in a startup. So that's really how this whole thing started.
That's interesting. And you as well, you were in a private equity side of the things, and then moving into tech and AI and starting up again. So I want to know a little bit about you as well.
13 years in private equity, I loved it. And I saw lots of really interesting business, met lots of really good people, saw good things and saw bad things in terms of how stuff was done. And I got to the stage where I wanted to do it for myself. it also comes from, I think, a family background as well. My dad started his own business, so I was kind of used to that kind of startup business environment. So it didn't feel so strange to kind of go and step out and do something. It was more about finding the right opportunity to go and do it.
How did you two meet? How did your paths converge? And I want to talk about your joint story as well. When did you guys meet? When did you people realize that we are the right partner for each other? And of course, he's also your mentor. So take us through that. Why don't you start? And then I think Akshay would also.
So actually, I mentioned Progeon. Post Progeon, he moved back to the UK. Within private equity, there's this concept called entrepreneur in residence or operating partner, and you have someone who's been there and seen it and done it, and they come in and they're in the business part-time, and you're out looking for deals together, finding things where your deal experience combined with their operating experience can make a difference. And we got partnered up. We got involved in various deals, sat on boards together, and it just developed over time.
So the chemistry was already there, and you guys just.
Chemistry takes time, doesn't it? It takes time to get to kind of know each other.
Yeah.
There was a set of sort of shared values.
Correct.
I don't think we ever spoke about it, but I certainly felt it was there, and because of that, you can shortcut so many things.
Yeah.
Even where we've kind of disagreed over the years. I can remember one or two points where one of us would be arguing A and the other would be arguing B.
And we're going to get to that.
Well, but then we'd go away and we'd come back and we'd have reversed positions. And then it was kind of on the third time that we'd kind of found something that kind of worked in between. So I think, you can only build that up if you build a kind of chemistry with people and values are at the root of all that.
But Akshay, what, according to you, make this partnership works and thrives? And you guys have been working together for a really long time now.
See, any partnership or any organization or any startup, for me, there are two things that absolutely must be there. If either of them is not there, then I will not do it. One is you must be doing something that you enjoy.
True.
Secondly, you must be working with people you like. The only thing better than building something is building something with somebody you like.
True.
And that has a lot to do with trust. And as Bruce correctly said, trust builds over time.
Yeah.
And trust doesn't build just with the passage of time.
Okay.
It builds when you go through difficult situations together. So if everything is going well, then everything is fine. You never disagree. But
I think that's a flag too. If you never disagree,
then you don't know how the other person responds.
Yeah.
So it's only when you go through difficult moments together and you come out on the other side and you realize, okay, I trust this guy.
Yeah.
Then it works.
I agree, actually. So, coming back to InvestorAI for a bit, what is that problem area or market opportunity that you both couldn't unsee, and hence you decided AI is the answer and we are going to do AI for equity investing and build InvestorAI?
Before we started it, we actually had a startup before called InfraHedge, which we sold to State Street, and that was involved in risk management in the hedge fund sector. When I left that business, we were the market leader in that segment. But what was obvious was there were things that hedge funds had and large investors had by dint of having lots of money to access hedge fund that weren't available to the regular person in the street. So for me, came from this background where there's got to be ways that we can deploy tech better and kind of help people get to better outcomes. And ultimately it's about outcomes. It's about how well you can kind of do for people. So the kind of background sort of started as that. And then the more I got into it and spent time with Akshaya and Sartak, who is our kind of AI genius behind the scenes, and realized what was possible and what we could do. Everyone talks about democratization, but genuinely there's a kind of democratization moment going on. I've said this before, but when I was growing up, you couldn't open a broker account unless you were rich or from the right family. Now anyone can open a demat account.
Correct.
It's so easy.
Yeah.
But opening that's only kind of step one in the journey. How do you know what to do? Everyone could go on any WhatsApp group and say, tell me something to buy, and you'll get, but no one will tell you when to sell it. And And investing is about that whole kind of continual piece and how we use AI to bring all that together to create good outcomes for people, I think is really important.
True that, because exit is as important as entering a market or a stock or even a deal. There is obviously a lot of tech which has been, used to build the foundational model of investor AI. Can you talk to us about what is unique about the training, the data sets? And I believe Bruce will also add to it, but maybe I'll get you started.
So the first thing you have to understand, why are we doing what we are doing, and then how we built the model to solve it. During the pandemic, we saw tens of millions of people going directly into equity markets, bypassing advisors, bypassing banks, bypassing institutions, and so on. And we talked a lot about it, and India was a prime example of this. So was US.
Right.
And we felt that this is a long-term secular trend in the wealth industry. If you ask me now, I will say the wealth industry in 20 years is going to be three clear segments. One is high net worth, private banking. Second is people who want advice. And third is people who don't want advice. And this third cohort is going to be bigger and bigger because they're younger, they're more digital, they're more, information savvy, curious. They don't want anyone telling them what to do. They don't trust institutions.
And they're comfortable with AI telling them.
And forget AI, they're comfortable with using technology.
Correct, yeah.
So we felt that there is enough services for the high net worth, but there is nothing for DIY.
Yeah.
So that's why we started to build what we built. For the simple reason that all LLMs, ChatGPT, Anthropic, etc., they are trained on all possible data on the internet, whether it's healthcare, whether it's biotechnology, whether it's ancient history, whether it's tourism, whether it's travel, hotels, everything.
Yeah.
Now, if I'm going to give an investment recommendation, what does the rest of it have to do with it? It's a complete waste.
Yeah.
And because it is trained on so much of irrelevant data for our purposes, it ends up giving hallucinations and idiotic recommendations. And we felt that this is not good enough for us to produce a consistent investment outcome for a customer. So we built our own. Having built our own, it's worked brilliantly, and we are incredibly proud of it.
Yeah, as you should be, because...
And I read papers, India will never have foundational AI. Guess what? India does have foundational AI now, today.
Yeah.
But for investments.
Correct.
Building foundational AI for everything anyone could possibly want
is already there. Why build it again?
No, and it's a waste of time. Building it for a purpose, for it to produce a certain outcome, for a certain segment of customers, that is very powerful. And I think that is where India can be extraordinarily ahead of everybody by taking a vertical AI approach to AI applications. Just the way we have done it, something for investment, something could do healthcare, somebody could for retail, somebody could do for something else. And I think that is where India would excel. Let's not try and copy what's going on in California.
Correct.
Let's create our own.
Our own, yeah. And that's what innovation really is, actually. So, talking about AI in the business, describe the moment, if you can recall, when you hit PMF, and was there anything, maybe a feature or a learning, it could be small or large, which really moved the needle for you and you're like, back, we've got this right now?
The thing with product market fit is you think you've got it so many times. You keep this is it, we've got it. And you get 100 users or you get 1,000 or you kind of hit certain things. I think the time that it really resonated with me was we're producing consistent outcomes. We've now got more and more brokers want our product on their shelves. And we're seeing renewals coming through from customers. At the moment when someone phones you rather than you having to make all those outbound calls. So the minute you get that first inbound inquiry, that is quite a telling gesture.
Right.
If I can add to that, I think PMF, product market fit, is an incomplete idea. 5 years ago, we had an app that gave you ideas. And it stopped there, didn't do anything else. It worked really well. It was very appealing, very attractive. And it was called InvestorAI. That's the origin of the InvestorAI name. It did very well. We said, firstly, we're launching it. We will make it free. And then later on, we will charge. And lots of people used it. We went to a 5-digit user number very quickly. Then we said, we will charge, I don't know, 10 rupees, 20 rupees a month or something quite small.
Yeah.
And our user base vanished. Okay. So we
because
thought...
it's India, subscription is hard to crack.
Exactly. So It doesn't matter. Nobody will miss 10 rupees, not even the cost of a Starbucks.
Yeah.
But people don't want to pay. So product market fit without pricing is a silly idea.
Yeah.
We thought we had product market fit, lovely product, customers love it, great feedback, producing great returns. The moment you put a charge to it, it goes. Now, it is India to some degree, but this behavior is not uncommon.
Yeah.
So product market fit with pricing is the complete
idea. So Akshay, my question is that you run billions of features, data sets, transactions every day through the InvestorAI platform. So what decisions are you really driving on the ground for the retail user? I mean, the blanket of the decision is the investment guidance, let's say. But underneath that, can you break it down? What is the level of decision that is, going in for the end user to make that decision of buying a stock or selling a stock?
Our mission or purpose or whatever you call it is to help the end investor make better decisions. Recommendations alone are necessary but not sufficient. Okay, so our AI models produce the recommendations, and the way they are built, they look for certain patterns. The thing about AI, which does not happen in mathematics, is if I teach an AI to recognize a brown face, the more brown faces it sees, the better it gets.
Yeah, the precision improves.
Yeah, the quality, accuracy improves.
Correct.
That's what's happening to our AI. It is getting better year after year. So if you look at our, our flagship equity basket that we do, its returns are astronomical, and it's getting better year after year because it's learning. That's the power of AI. Now, like I said, the models alone are necessary to create the recommendation, but the recommendation has to be actionable.
Correct.
In order to make it actionable, we have to surround it with a delivery layer of technology that actually enables the user to do what they want. That is the complete product.
A little while back, we were talking about the chemistry and the trust and how disagreements are a part of it. So I believe you guys have known each other easily 20 years.
Pretty close to that, yeah.
Now, when you got together to do InvestorAI, I'll start with you. He came with an idea, let's build this. Any initial problems that you saw with the idea? How did you de-risk it? What did you guys talk about? How did you refine it? Take us through that.
The idea evolves. In any startup, you start with an idea, but that's not the idea you launch. Okay, it evolves through discussion, it evolves through implementation. So in our case, it has evolved. It has pivoted also, as the popular phrase. And it is actually the pivots that make you more successful as you go forward. We have lots of disagreements. Okay. But the one golden rule we follow, which we have never written down or even spoken about it till now, is that we will disagree, we will talk about it at length, we will sleep on it, come back and argue some more, but we will only act when both of us are in consensus.
Okay, so it
So
has to
either
be
he has to convince me or I have to convince him, or both of us have to convince ourselves of a third position. Until both of us are convinced, we do not act.
I follow that actually. If I have an idea or if I want to discuss something, let's say with my team or anybody, so I'm like, either you convince me or I'll convince you. Whoever convinces, that idea wins.
That's the intellectual obligation all of us have. You have to be disciplined enough to bear in mind that you're actually arguing about the idea, not about
against
the person.
Each other. Yes.
So just because I don't like the idea, it doesn't mean I like you any more or less. So you have to separate the personality from the issue at hand and argue about the issues. That is when you can make constructive progress without falling out.
There's a piece in there. It's about assuming positive intent. So I know that if we're having a disagreement, I know that Akshaya's doing it for the best interest in the business, and he knows that I'm doing so the fact that you've got that assumption of positive intent on both sides makes a massive difference.
I wanted to actually ask you, give me an example of a passionate disagreement that you can think of.
We've disagreed about lots of things, but we've always agreed kind of post that. If I think about kind of the tough ones, when you're in an early stage of a business, there are sometimes a risk that you can chase revenue and it's the wrong kind of revenue. And I can think of one or two of those situations going back a few years where we were probably chasing something that would have got us short-term revenue, but wouldn't have contributed to long-term growth or the long-term strategy and vision. And what Akshaya was able to do was to really kind of ultimately kind of pull me back from that and
Right.
kind of get you focused again on kind of where you were going in the long-term vision. So I think that would be my kind of best example of that, where at the time you're in the trenches, and when you're in the trenches, you fight what's in front of you.
Correct. Sometimes
But
you
sometimes
lose.
you need
Yeah.
you need a kind of general at the back who's able to kind of see the whole battlefield and kind of help you look at it.
True.
But let me just add to
Yeah.
give you another example which Bruce will remember. And that is not an example where I felt differently and I had to pull him back or he had to pull me back. This is way back in 2013, I think, when we were running this company called InfraHedge, and State Street owned 51%. I was on holiday in Greece,
Yes.
and I get a call from State Street. For some reason, they were panicking, and they said, "We need to buy 100%."
Okay.
I said, "I'm on holiday. How am I going to decide now?" Anyways, so they said, no, you have to decide and this and that. So I called Bruce, and Bruce was vehemently against it.
Acha.
Okay, and I was not happy about it, but they owned 51, so I didn't see how we could this thing. And it took us a while. And then I said to Bruce, I said, "Look, if you don't agree, both of us will walk away. But whatever we do, we'll do together."
That's
And then eventually we came to agreement, we sold it, etc.
great. That's actually brilliant and brave. So that would have taken some working on yourselves, like we are clear who's doing what. And because this company is a long-term asset that we are building, so that's I think very important to have that clarity between the two
Still
founders.
work in process.
So talk every single day.
Yeah.
If you go on to the favorites in my phone, there's my wife, there's my 2 children, and he's on it, right? And that's it. We speak every single day. Sometimes it might only be 5 minutes. Sometimes it could be a lot longer than that.
Correct.
But that checking in, when you're sitting in the CEO's seat, there's very few people that you can talk to.
That's
so
right.
having someone that you can talk to that's been there, that's done that, makes a massive difference.
Yeah, and you can speak candidly and you can share sometimes if you're feeling unsure about a decision and things like that. It's very helpful to have a mentor who will always have your back no matter what.
See, being CEO is a lonely job.
Yeah.
My job is to make sure he doesn't feel lonely.
AI in our generation, if we look at it this way, is hardly maybe 10, 15 years old sort of a technology, not like goes back from the world of email. Emails have been around longer. And hence, AI is usually said as a young person's business. But both of you started this company pretty late. I know. So how does this overall age dynamic plays out? Does it benefits the decision-making process? Because while AI could be a young man's business, but the business is business.
See, I don't think AI is a young man's business. It is just a young discipline.
Technology. Yeah.
It's a young technology.
Yeah. Yeah.
As always, in any technology, there are the scientists who build that technology. Somebody came up with nuclear power.
Right.
And then there are different kinds of scientists who find applications for that technology. So Oppenheimer made that into a bomb.
Right.
Okay, and somebody came up with space travel, and NASA made it into a moonshot. So I think that's how we should think about AI. There is the core technology which needs different expertise, and I don't know if that is young or old, but as long as you have a level of curiosity,
True.
you have the right level of energy, and you have the right level of intellectual rigor to chase things down to the last point, I think that is really what matters.
Yeah.
And so if you take the second part of what I said, that AI you need applied AI. Now, applications will come from people who have been in the market and have experience. So I would argue that the best application vision of AI can be only created by people who have experience.
Yeah.
And those are necessarily older people.
The assumption and the trend is that it is younger people that are getting into tech startups. And I think that by and large is true. And actually, I talked about some of the kind of engineering skills that kind of come through there. As an older entrepreneur, I believe in the experience that I've got, that Akshaya's got, has kind of quite a material difference to the business and the decisions that we take. But you still, when you go out there fundraising, you've still got to go and meet, those VCs and those funders, and they've got to kind of believe in that too. I think that whenever we've had kind of discussions with VCs kind of over the years, I think one of the things that's come back has been about the kind of team experience. So I think using that team experience and applying that alongside the kind of AI technology skills is working well for us.
Since we're talking about people and younger people in general, what does the workplace feel like? Have you started interacting with the Gen Zs? Do you understand what they say? Do you I don't know what you're asking me.
So my kids are Gen Z.
That's right.
Right. So I can't not interact with Gen Z. I'm gonna kind of meet them all the time.
Yeah.
You look, in any workplace, you interact with whoever you interact in the workplace. You should be interacting with everyone. It doesn't matter. People that work for you and work with you,
Correct.
they're an important part of how you kind of build the business. So you've got to make everyone feel part of that.
And just to add to that, I think age is a red herring, Shabi. Bruce and I will remember. Bruce will remember that I've had a VC say to me that most of our founders are in their 30s, and we both got very offended. So VCs are quite ageist in that sense.
That's because generally they're in their mid-30s. I know I used to be one.
So many of these VCs are pimply kids. They don't really know. They have no business experience.
Yeah.
It's a little bit about diversity in the workplace.
Yes.
And diversity is not just about gender and sexual orientation.
Yes.
It is about age, it's about outlooks, it's about cognitive
Different walks of
diversity,
life.
all kinds of things,
Yes.
And it's only when in a small company, it's hard.
Ah.
Because in a large company, you can have many kinds of diversities.
Correct.
But in a smaller company, it's harder.
Yeah.
And you have to be more mindful of the fact that this is a point of view, but maybe not the only point of view.
Correct. But as long as those point of views are heard, maybe I think that sort of adds to the whole thing, maybe.
Absolutely. You should weave it into the fabric. You shouldn't try and kick it out.
All point of views must be heard.
Yes.
But you must also remember that a corporate structure and a startup is not a democracy.
Yeah.
So it's not majority voting. Ultimate decision maker is there.
I absolutely
Here,
love
everybody
that.
make your decision.
Absolutely agree with that. Because yes, point of view should be heard, but then the person driving in the driving seat has an objective in mind, and not necessarily a point of views kind of
And
integrates.
the person has to balance it. So
Yeah.
best corporate structures are benign autocracies. They're not democracies.
True. True. I find myself agreeing with it. Right. Okay, Bruce, we also spoke about capital efficiency in India, and it is hard. We all know and acknowledge that debt market isn't really mature, or there is, from the founder side, there is much love for equity-based, money coming into the business. So how do you build discipline in this equity-heavy world?
The day you raise your Series A, you can't suddenly change the way that you were thinking the day before. You can spend money once.
Correct.
So when you spend it, make sure you spend it well. So if something is constrained, you make good decisions. If you're constrained by the number of people you've got in your team, you'll resource allocate really well. If you're constrained by capital, you'll make the best decisions on that. So having that mindset of being constrained just forces you down a route of the right kinds of decisions.
Do you have a take on this, that if a founder has to maintain discipline when it comes to capital efficiency and not raise one round after the other, like in InvestorAI's case, you raised a round last year, and if there was probably a younger company or much younger founders, they would have done 3 rounds by now.
If you're just raising money because I want working capital, then it's a little bit loose. If you're saying I'm going to raise money to scale, then and I think this is a discipline that founders must have.
Okay.
It is also a discipline that investors must ensure. The VCs and the PE funds must ask what is the money going for, and then have some kind of loose monitoring mechanism that it is indeed going there and not
Mm.
paying
Mm.
for big bonuses and international travel and that
Right.
conferences and
Right.
things.
Right. Agreed. Yeah.
So that
And-
means the corporate jet's off the plan then.
No, maybe later after we raise money.
Okay, actually, earlier in our conversation, you spoke about that PMF is an incomplete idea without the pricing.
Yes.
Okay, so now how do you approach pricing at Investor AI? Either one of you can take it, maybe you start, but as a vertical AI play.
We see 5 markets.
Hmm.
It's going to be a slightly long answer, but bear with me.
Okay.
One is the DIY investment market, people
Yeah.
who want long-term exposure to equity.
Yeah.
Okay, that's what we're doing today. Second is the DIY trader market, and we're coming up with the option trading product very soon. Third is the high net worth market, and we are coming up with a product for that. Third is the fund market, which is much more tax efficient. And fourth is the international market, where international money comes into India. Strategically, we want to play in all 5. Now, in some of these 5 segments I described, the most practical way is to offer your intelligence on a subscription basis. In some cases, for instance, we are thinking of an AIF or a PMS kind of thing, where we will manage the money. So there we will charge as a AUM based. So we have to think about it. So pricing is different depending on what customer segment you are using, you're going after, and what is the vehicle that is being used. If you have a fund, you can never subscribe to a fund on a subscription basis. You have to pay. So there are market norms that we have to follow.
Yeah.
So that's what it is. Philosophically, I don't want to have a price that is extremely high, because we have to deliver outcome. If we deliver the outcome, then I have no hesitation in charging a good price. Okay. I think India is an incredibly price sensitive market, which sometimes I feel bad about, but many times I feel it has actually forced a cost discipline on us that we would not have experienced in America or Europe, because the price point is so much higher. If you charge 10,000 rupees subscription for the year, that's £100. I could be charging £100 a month for the same product in UK. So having a low price point actually forces certain tightening of the belt, which is not a bad thing.
Also, that's why India is also called like a volume market in that sense, because.
But I think there's a problem with that as well, isn't there? Which is many startups you see are just everything's for free. And it goes back to Akshaya's point about product market fit having to have value or price built into that, because you see lots and lots of businesses kick off and we'll run it for free for a while, then we'll change. We'll run it for free for a year or two, we'll build up this massive customer base and we'll change. And I think there's a lot of capital has followed companies in India to do that, and it hasn't necessarily kind of followed through. So I do think because it's such a scale market, there's a temptation to say, well, we'll do the land grab and we'll do that. I don't feel that, but I just think generally across the startup ecosystem it exists.
I think that also happened because and it's mainly happened in consumer internet, this thing. But that also happened because these companies are all building a category and a habit. A habit to order a cab, a habit to order your groceries. So I think that maybe for them, it sort of worked at that time.
Yeah. To do it in the investment industry, are you actually creating a habit, or have you just given something away for free? The habit only happens if that person keeps coming back.
That's true.
And they have to value what they're doing, and they have to get good outcomes or better outcomes off the back of that. So I do think those things go hand in hand. And I think if as an organization you go down that free route for too long, it's difficult to measure kind of how well that habit is forming and how much value someone's attributing to it.
Yeah, and will that person come back if I start charging? Actually, for you, I want to understand that, for a young startup which is currently in a scale-up mode, experiencing good growth and things like that, it is important to balance growth and unit economics, and we just touched upon it right now. And it is a tough act. It's not easy, How you ensure that you achieve one without sacrificing the other?
We have a certain fixed cost. Okay, if you have build AI models, you need a team of 10 people or 20 people or whatever it is. Otherwise, to build one model will take you 12 people, to build 8 models will take you 12 people, so
Right.
so there is a certain fixed cost to the product. We should cover the fixed cost of the product with scale and the variable cost by unit pricing, which means you have high operating leverage. So if your price is 100 and your variable cost is 20, then 80 is the margin that goes to big contribution towards fixed cost.
Correct.
If your variable cost is 80, then you have only 20 to contribute to fixed cost.
Yeah.
I would much rather build a high fixed cost business than a low fixed cost business with a high variable cost. Because if I have a low variable cost and high fixed cost, then with volume, my fixed cost
Yes,
will get
it will
covered.
come down
Once it
eventually.
gets covered,
Yeah.
then, and I only pay 20 rupees for every transaction,
Yeah.
and the 80 rupees goes to my margin.
Correct.
So with scale,
Yes,
good
you
for the
can
margin.
cover the fixed cost and
That's why I prefer that. So I want a high gross margin, a low fixed cost. I think technology businesses lend themselves to this kind of thing, because if you build a consumer facing business, then the variable costs become very high, because there are, you need an army of people to hire, maintain, keep customers.
Yeah, another cost on.
The cost goes up.
I want to understand that in terms of key growth matrix, where is InvestorAI today and what it will look like, let's say, in 24 months or 36 months?
We raised our Series A last year.
Yes.
You know that.
Yeah.
Our revenue last year was 20 CR, just a bit more than that. We're already at kind of 3x that in terms of kind of like for this year. So we're going to finish this year with more than 3x where we were last year. So that's a great place to be. I would like to be at 4x. I'd love to be at 5x, but I think we're in a really good place. I think we've got real product market fit with our core equity baskets. We've been able to launch some new products this year, and we're seeing some real kind of take up there. So I think as more of those come through, they all sort of fit in what Akshaya referred to as that DIY equity investor. I think if I think 24 months out, I think we will be quite far advanced on quite a few of them. So kind of what does that mean? That means some kind of D2C retail trader product alongside our existing DIY investor product. That means some kind of AIF, PMS, high net worth product. And I'd like to think that we'll be some way through or some way advanced on the kind of mutual fund piece as well.
Right.
And, kind of given, both our backgrounds, international is quite an obvious area that fits into all of that. So within 24 months, I'd be disappointed if out of all those areas, we weren't really active in some of them, and kind of at the early stages or seeing the green shoots of some of the other ones.
Okay, that's great. That sounds like a full-on plan, and I have no doubt.
Well, look, what do they say? Plans are great until someone punches you in the face. That's what Mike Tyson said. Actually, I said, hey, you got to keep pivoting, you got to keep moving and be flexible. But I think we've got a lot of the right components. We just got to, keep going and keep driving it.
Start of your previous response, you said that you raised funding last year from Ashish Kacholia. I want to get your perspective in why didn't you go the traditional VC route?
Look, what we're trying to do is something very different, which has not been attempted in the Indian market.
Yeah.
What we are really seeking to create is a multi-product asset management company that serves all kinds of investors, whether they are people who want to go into funds, whether people who are high net worth, whether they are DIY. There is no entity in India that does that. People think of mutual funds, but they serve one kind of market.
Right.
You have AIF, and I think they serve one kind of market. You have small case who serves one kind of market. There is nobody who does them all.
Correct. And you want an investor who understands
Correct. So having an investor, money is money, but your money and his money and somebody else's money looks the same. Having a mindset that is to whom the strategy appeals is very important. And we found that in Ashish. The second thing we found in Ashish is that he's dead straight. Yes. You can take him at face value, which is not something you can say about a lot of people.
You need more people like that.
And thirdly, he moved fast. and we are all getting long in the tooth. So speed is important.
Yeah.
We have less time than 25-year-olds.
That's good. And AI business is built on speed. So it's okay to have an investor who's speedy, correct, efficient, and everything else. Okay. So now building on that, what is your capital runway looking like at the moment? And also add in it the competitive landscape and how do you see positioning InvestorAI? Like you said, it's a multi-product company that we're building. Is there any other nuance to that position?
Yeah. So in terms of capital runway, we don't need more money to do what we're doing. We're cool on that. Where we will raise more money, and I use the word will rather than might, where we will raise more money is to do different things.
Okay.
So where you want to do something different, we can get it started, we can go out and test it and make sure that it works. But then to really kind of scale that, we'll raise money for that.
Right.
So I think that when we do go back for more capital, it won't be to be doing more of the same. It will be to add in, out of those 5 things that we were talking about, it'll be to add in significant scale in one of those other areas.
Right. So like you said, the objective of raising money should be clear.
Absolutely.
And then you can bring in capital efficiency, discipline, and all of those.
Absolutely.
Things. So I think, we've spent considerable amount of time talking about the tech business, people, and what really gets you both, excited every morning to build InvestorAI and scale it. So I think it's time we take a little bit of a breather and we introduce our rapid fire segment. So let's go, gentlemen. You have to pick, and whatever comes your way, you have to answer. There's no without a question.
The first question is, who is your favorite PR advisor? It's not really. It's not really. The first question is, one feature you shipped that users loved but finance folks doubted. This goes back to an early kind of version of what we had. We had one feature called Play.
Okay.
And what Play did was it allowed you to compare one stock to another stock. And it really was so simple. It was so simple. And whenever you looked at the app stats, it was the one that just 10, 20, 30, 40x more visited than anywhere else. And it really didn't do anything, but it was just engaging. People loved it from an engagement perspective.
Yeah, okay, right. But now it's no more there, so...
it was different time.
Because it is evolved. You go, Akshay.
Interview red flag you never ignore. You just want one?
Depending on the time you have. This is my favorite topic.
Look, I've done lots of interviews.
Yeah.
What always puts me off is insincerity. Everybody's intelligent enough, so I don't think...
On paper, at least.
On paper, people are intelligent. You don't need to be a genius to work in investments. I just want people to be authentic. Just be what you are if you're, and that's fine.
Fine. If you don't know anything, you can say that. Yeah.
No, it's not about knowledge. It's about skills, attitude, and what kind of person you are. Try and put on saying, Bruce, you're wearing such a lovely shirt. You look so beautiful. This is nonsense.
You are wearing a lovely shirt.
Thank you.
Yeah. So a lot of interviewers say that. I've seen your CV on LinkedIn. I'm so inspired. In 5 minutes, you're inspired. So
I get
that kind of inauthenticity never works.
In my little small career of interviewing people, for me, one red flag that really I think in recent times only begin to sort of understand. I can figure out from a CV when I read it who is a CV builder and who is a doer. I can tell the difference today. And when you speak to them, then obviously it is clear. But even before you get to the interview stage, so you're going next.
A myth about retail investing that you want to retire. I think one of the things that we hear a lot about is Gen Z are overly focused on social media and are getting into futures and options and derivatives and they don't know what they're doing. I think it's wrong for us to think about Gen Z that way. I think they are much better equipped than the generations before them at finding out information online and actually knowing what they're doing. And also, you know what? When we were at that stage of our lives, there's a certain amount of spare capital you could have to play with. The fact that they're trying it in the investment markets, I think is a good thing. So I think the myth that I would like to get rid of is that Gen Z don't know what they're doing.
one rule for handling disagreements.
Which you already spoke about.
Yeah, we spoke about it, but I will quote Mr. Narayan Murthy that it's fine to disagree, but it's not fine to be disagreeable.
Yes.
You know, and it goes back to what I said earlier. It's not a personal disagreement.
Yeah.
If I disagree with you, it's not that I like you more or like you less.
Correct.
It has nothing to do with that. We're disagreeing on the issue.
On the idea or the...
And on that, you must disagree till you are satisfied one way or the other. Because, that's the intellectual integrity I want the organization to have.
Yeah.
But if you can, and not many people can confine their discussion and perception. People always take it personally that he's disagreed with me. Oh, he doesn't like me anymore. But that's a wrong logical connection.
No, I agree. Cool.
A line you wouldn't cross to improve returns. Whenever we've kind of built our products, one of the things that I think you've got to be really careful of is that you've got all this experience in investing, that you try and build that into product. And that means, I take intraday as an example, our intraday product has stop loss built in. Now, we could actually deliver better returns for people if we didn't have a stop loss, because sometimes a share will bounce down and bounce back up, but it's the wrong thing to do. So there's a piece for me around, you've got to do the right thing for people. And in that case, that's about, with experience, knowing that that's how you protect people's downsides. So I think there's something around, honestly, what would you tell your granny to do? Right? And if you wouldn't tell your granny to do that, then you shouldn't be saying it to someone else.
I think there's a last one. Should I go for it or should Akshay go for it?
What is the biggest non-work habit that makes you a better operator? This should go to all three of us.
Yeah, I don't mind actually.
Yeah.
I'll take that first. I cannot skip my workout. I feel like keeps me centered. I do not snap at people. I feel like it really, really helps me focus also. What about you?
When I was working in London, it was about I used to get on a bike. I used to cycle into the office.
Okay.
And when you're cycling through traffic, you can't think about anything other than the traffic round about you and staying alive. So even though your chairman says, I wish you wouldn't cycle in because that's too much personal insurance at risk there, it was a great way for me to kind of empty my head and kind of start fresh. My equivalent in Mumbai is football. I go play football, and again, I'm getting too old for this. So as a result, there's no energy left in the tank. So it's a
But
bit
you're still into sports.
It's more about emptying your head. If you can empty your head, it's like
important,
it's hitting a reset button. You come back so much fresher.
Yeah. What about you?
Look, both of you have said fitness, so I'm not going to do that. But for the last 27 years, I've been a subscriber to a website.
Okay.
That sends me a daily report of 175 artists I track. And if any work of theirs has come up for auction anywhere in the 12,000 auction houses in the world.
Wow. Okay.
So every day they send me, I spend 20 minutes going through every single item, checking out sizes, prices, etc. I buy maybe once a year or something. So it's not about buying.
It's not that, it's the whole process of it.
What it does, it completely distracts me because when I'm thinking of that, I'm not thinking of anything else.
Right.
And I've been doing it every single day, including Sundays, for so long that
it's not
you
routine.
start to build muscle memory.
Yes.
So I can look at something and say, I know what it is.
Interesting. I think it's needed. We need that maybe 20-30 minutes just for doing something that we're doing for only ourselves. We are not building a company in that moment. We are not, doing client calls and things like that. I'm now taking you guys into the last segment of our conversation today, and you have been extremely patient and highly supportive and lovely. I will get started with you, Bruce, because I have spoken to you not pretty much every day, but pretty much every day. And one thing that always stood out for me is that your warmth, the adulation, the way you always talk about your family. And I feel like they really form a huge support system. And you started up a company when your kids were much younger, So what really went through your head then? Let's start from there.
So you're right. Gosh, my kids were just started
Yeah.
at primary school. It was probably the worst time in my life that I could have gone and done that. From a financial perspective, it was idiotic, right? Why would you do that? But you know, when you get an opportunity and you see a market and you see something, you kind of have to sort of make a decision. And you know, what was it, the Lloyd George quote? You can't cross a chasm in two leaps. You know, sometimes you have to take that jump. I think the most important thing for me through all of that was my wife. You know, she was there. She was backing me. She was making sure that, you know, financially everything was working out kind of back at home. And
Yeah.
if I remember that first business, we set some milestones, and we pretty much missed every single one of them. And we said, if we don't do X by this date, then we'll stop. And we didn't, because when we got to that date, we could kind of see it, so we were close. So we kept going again. So having sort of said to myself, we'll be really disciplined, we'll kind of do these things, we actually then, the kind of emotion and the drive and the ambition and everything else kind of came out. And, you know, she said to me one day, she said, every morning when you get out of bed, you get out with a spring in your step. She said, when you were in corporate life, it wasn't quite the same. And she said, the day that you stop being like that is time to stop doing what you're doing. And I thought that was, I hadn't even realized I was doing it,
Correct,
but it
yeah.
was just such an insightful comment about my kind of state of being.
But to think of it, she's right. If you get up in the morning and you're struggling to sort of show up at work, you should not be there. Yeah. And that's what entrepreneurial things probably do to you. Akshay, when it comes to you, I want to understand, was there a moment, because you have done other startups in the past, and this is another one in the journey of your career. Was there a moment when your partner believed in your idea or in you before you actually did?
Life is about achieving balance.
Yes.
If you take very high risk on one side, then you have to have a lot of stability on the other side. Because if you have so much risk and so much, then it sort of goes crazy.
Yeah.
You can achieve stability many ways. You can be financially incredibly stable, so I was worth 100 million pounds. Then you know, doesn't matter what risk I'm taking. You can achieve through support from your spouse or your partner. You can have family. You can have, you know, a very special friend who sort of stands by you. There are many ways to do that.
Yeah.
And in my case, I've been fortunate. I have taken risk. So I moved from London to Bangalore in 2002, joined Infosys, completely switched careers from banking.
Right.
And my wife at the time said, we don't have children, so, you know, I have a career, we'll run two careers. And it wasn't easy, but we sort of went through that. When I left Barclays and Bruce and I wanted to set up, you know, we were taking risk on one side.
Correct.
So, you know, a support system matters.
Yes.
Not naturally it comes from your partner, but it can come from many other sources as well.
True.
You know,
True.
and that's what brings balance.
Fair. Yeah, I agree. And Bruce, you just spoke about your family and the kids being young and all of that. Now, when you look back, what do you think your family have sacrificed and maybe gained something in return of those sacrifices? Is there something?
There were points where, you know, financially there's been sort of sacrifices in place. I think the bigger sacrifice is about availability.
Yeah.
You know, I sit in Mumbai today, and you know, my kids are in London. My wife's actually en route to Mumbai just now.
Yeah.
But you know, I'm away from my family a lot, and if I go back to when they were younger, you know, one of my things was I had to be home at weekends. So I was working in the US at the time, and I used to fly back on a Friday night, and on a Saturday morning, the important thing was, I coached my son's football team, was to get to the football pitch in time to coach the team. So I would sometimes turn up with my suit on and my overnight bag to the kind of football pitch to kind of, you know, coach the football team. So whilst I wasn't around through that time, so they definitely sacrificed you not being there, and my wife took up a lot of slack in that. The kind of the flip side of that was then making sure that when I was there, I really was there.
Yeah.
So that became kind of quite sort of full on the flip side of that. I think on the financial piece, you know, you don't start a business to make a lot of money.
Right.
That is hopefully an outcome at the end of it. You start up to do something different and to make a difference. You know, I hope at the end of it, there's, you know, financial piece comes through as well. But it's honestly, it's not why you do it.
True that. And, you know, it is important, like, they understand that you are on a journey, you're building something, and they're making those sacrifices. But we must always remember that, be grateful for it, you know, because if it's not for our respective families, I don't know what we would build, and will we be proud of it? That's more important, you know. We'll still build maybe, but I don't know if that will give us true happiness.
But you know, look, you know, Bruce has different circumstance. He has children. I don't have children. It's not a hierarchical thing that I'm doing something important, therefore my partner must sacrifice, or she's doing something important, I must sacrifice.
Yeah.
It's an equal relationship. You know?
Yes.
You make trade-offs,
Yes. Yes.
and the trade-offs are joint decisions. So
Yeah.
I don't see anything as a sacrifice. You sometimes compromise, you do something in preference over something else. Because anyway, you can't do everything all the time. So you have to choose.
Yeah. Yeah.
And that's a trade-off you have to make in,
Yeah.
in life and many things.
Yeah. No, I'm part of this club. I subscribe to equal partnership. I do understand on most days, sometimes your partner will be 80 and you will be 20, and some days you will be 70 and he'll be 30. So, but that's okay. But that's still an equal partnership, because situations really, you know, mold us around. But thank you, Bruce, Akshay. This was just great. I just don't know what else to say. And I absolutely am thrilled and thankful that you both made the time and came here today to speak to me. Thank you so much.
Thank you,
very
Chair.
much.
This is the Zero to Scale podcast. If you found this conversation useful, hit subscribe and share it with someone who will value it.